Hey, and welcome to another video lesson at Skag Academy. We're now going to begin going over reaccumulation schematics, right? So for those of you that are unaware, reaccumulation schematics are slightly different than normal accumulation schematics. And if we take a look at the first one here, we can see why by looking at literally the first little part of the range. Right, in a standard accumulation, we know that price comes down into the accumulation, right? We know it comes after a markdown phase. So price begins to move down, then gets accumulated, and then moves up. In a reaccumulation, we're looking for a continuation, right? We're looking to reinitiate that same cycle, right? Which means we've actually coming up from an already existing accumulation, right? So this is actually moving into some continuation patterns, right? Things that will help us continue riding the trend. And maybe we're already in this trade from the accumulation, and then we begin to see some action, right? The reaccumulation will let us know that we are in the clear to continue holding our trade, possibly even scale into some more of our trade and ride out that trend a little further. Right, same thing with redistribution, which we'll cover in the next section. Right, these are just continuation patterns. So taking a look at this reaccumulation schematic, before we move to our case study, there's a few different things that I kind of want to point out other than the fact that we have to already be moving up to be considered a reaccumulation, right? Because our stopping phase is going to be a little bit different here because we're not coming from the downside. In a normal accumulation, we'd be looking for something, right? The first thing being that selling climax. Because we're moving to the upside, we'll actually be looking for a buying climax first, right? And then the ARST, which will establish that we're going to go into a longer kind of drawn out range. And then only then will we get our selling climax. So in these kinds of schematics, you actually see that we do have a buying climax and a selling climax, and they come kind of right after each other. And that's because, again, just the nature of where we're coming from, right? We need to put a stopping action to that buying action first before we can then stop the selling action, which will give us our phase B and so forth environment. So let's take just a quick look at this, what it looks like on a chart. We're going to be using gold as an example here. And we can see we've got this little accumulation range down here. Price kind of broke up. It's doing its thing, and we're now trending to the upside, right? So as we begin to trend to the upside, right, we begin to form another trading range. And if you had, interest in this original trading range, maybe you were already in buys, or maybe you missed that party, right, and we want to look to get into it, maybe this new trading range up here will present us some of those opportunities. So if we kind of just follow what's going on here, where you begin to move up, the volume begins to dry up as we do so. We can see some of the earlier volume here. Even as we kind of started breaking out of the range, the volume kind of remained pretty low and, inconsistent. So we start to get signatures like this, where we get high effort, but we're not really breaking above any sort of structure all that too high, right? We want to kind of just start paying attention to what's happening. So we kind of just begin to watch. Some selling action comes in, but ultimately we continue to move higher. Volume at this point is really, really, really kind of draining, right? No big deal. We're still holding our positions. We're still maybe looking to get in, waiting for another opportunity to buy lower. And then we start to see a trading range form, right? We start to get back to the bottom of this range, and we start to see that the sell volume is starting to get a little consistent here, right? The buyers are starting to dry up. We've kind of already established we're starting to kind of go sideways here, start to break some structure. So we're going to start marking this up because, again, as we start entering any sort of trading range, we want to start marking up that phase A environment just so we have the outwards extreme bounds of our range that we can begin monitoring what's going on, right? So we have a few things here. We have a buying climax. Here, we're looking at the AR. Here, we're looking at an ST. And we're just going to mark out our support areas. Now, this is a little higher concentrated effort to the downside. All right, it looks like we kind of absorbed this pretty well, but we did kind of pierce. At this point, you would maybe even say, is this a sign of weakness? In our case, right, for the case study, it is technically going to be the selling climax, but you wouldn't really know that yet. Your first question would be like, okay, is this like a sign of weakness? Should we maybe look to get out of our buys here closer to the top of the range? right? We don't really know the full story of what's happening, so we want to, err on the side of okay, maybe this is going to move against us. And we're just going to let this play out, right? Looking at this phase B action now that we're moving into. Let's just drop a vertical line there to signify that. All right, we start to move up. Not really much buying action happening, right? Very, very, very low volume down here. Right, so we want to take note of that. We're going to say this is another ST. Right, no real buying action happening. Price starts to move back down to the downside, and then we get this. We get a lot of effort back up into the top of the range. And this is more effort than we've seen where we came off the sign of weakness, right? This is letting us know that maybe buyers are more committed to this than we originally had thought. So we're just going to ask ourselves, is this, reaccum? Is this a sign of strength? Are we actually seeing the market absorb up here? Right, and if that's true, we have to see lack of commitment from the sellers now. So we want to see what happens with this sign of weakness. As we begin to move down, look at the sell volume effort start to fall off. Not overly convinced about anything just yet, though. I want to see if we test any lower. Look at this, we begin to test, right, the same level. And we just start kind of looking at this and we're like, okay, the sellers don't seem so committed. The buyers actually did step in and started bringing price a little higher. So maybe this is some absorption. Maybe this isn't exactly a sign of strength, but we are absorbing a lot of the supply. We start looking at this as maybe not a sign of weakness. Selling climax, right? Again, recommitting to maybe this reaccum idea. And if that's going to remain true, right, spring below, start asking ourselves, what's going to happen if we start building up liquidity here? Will we spring below here? And then you might also want to start looking and asking yourself, if that is true, where would be the best spots to maybe begin buying? Right? Is there anything below here that maybe we would be interested in actually entertaining? So as this kind of lets this play out, I'm kind of just waiting, seeing if we can get maybe some sort of spring, some sort of sign of strength, anything to kind of confirm for us that this really is absorption and we are ready to kind of break out higher. We start getting price action like this, again, pushing to the downside. The seller is really not all that committed in this action. And at this point, we start to actually look to break lower. Now, like I said before, we start building up liquidity here, right? So we see all of this liquidity build up, right? Spring below, liquidity build up. And if we actually just take a look over here, right? What actually pushed us up into this reaccumulation, we do have some order block structure. Now, again, you guys are going to learn this in future lessons on how we look to execute and where we look to do that and exactly how all that works. But if we just start applying some of the logic that we already know about order blocks, we could maybe set a limit on this order block, with the buildup of the liquidity here. And maybe our idea is we just run a stop loss right below, and, that's our trade. So let's kind of just see what happens. We'll just play this out again, following some of our logic. Price starts to break below. And again, as we see this break below, again, the lack of commitment from the sellers plus this absorption that we see here is still making us lean towards this is now playing out as a reaccumulation. So what we're looking for is our phase C environment. Is this our spring here? Do we still, maybe trigger our order block here? What's exactly happening? At this point, this spikes right down into our order block. And if we just zoom in on this action real quick, right, look at the down candle. Look at the volume level. We push down on the highest concentrated efforts that we've had in the range yet, right? So we break liquidity in the highest concentrated effort. As you guys know, we do want to see springs typically do what? Erase quickly and on even higher effort. So we get that immediate bullish candle, immediate more buying action coming in, so higher effort right into the order block. This is a beautiful trade. Even if you didn't catch the beautiful snipe on the limits, at this point, if you're watching the market, this is a 30-minute chart, so there's a lot of time that you have to begin, capitalizing off this, especially if you have alerts set. We start to say, okay, we have our phase C, we have our high effort here. We need to start looking at getting in buys. Again, let's say we scratch that idea completely. Let's say we want to just get in on this candle, play that accumulation out, because now we have our phase C analysis that triggers you, if not once, twice, multiple times for you to get in. Then we get this immediate move. Little concerning, this move, again, breaking out lower volume. At this point, you're already in the trade. And at this point, you can also estimate your targets. So if you are feeling, you would already be out of this trade, technically speaking, based off these targets, 1, 2, 3. So if you were looking at this on the lower volume, you could just decide to hop out. But we'll let the reaccumulation play, see what she did afterwards. Plays more cycles. Okay, yeah, she just drags out longer cycles. Eventually, possibly even reaching for extended targets if you leave a little bit of a swing. But the reaccumulation plays out, hits all targets, exceeds them a little bit. And yeah, that's accumulation schematic number 1. Now again, I, as always, want to show you this overlaid. All right, so there's the reaccumulation schematic. There's the price action. Again, we can see the PSY, the buying climax, which was here, the AR there, the ST, which in this is usually higher because, again, you're looking to continue higher, so you get the consistent highs in the range. It doesn't mean you don't get new lows, but the volume will always support the true intentions of the market. So that's a reaccumulation. Again, these are very, very, very common plays. These are some of my favorites to play, especially when you have the full setup with the build of liquidity, with the very logical order block. If you have very specific events happening in the market, which is, also this reaccumulation also happened to happen with high geopolitical tensions. So everything kind of aligned here. Beautiful, beautiful setup. If there's any questions, comments, concerns, if you have examples of reaccumulation you're looking to share with me, make sure to do that below in the Discord. And as always, I will see you all in the next lesson.